Half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Good morning. Let's get to your top stories today. President Trump announces a trade deal with Indonesia that could serve as a template for other nations eager to soften the blow of tariffs.
The dollar and U.S. Treasuries in focus with Trump piling pressure on Fed Chair Jay Powell. Investors now trimming their U.S. rate cut bets following muted inflation data.
And Chinese tech stocks in focus set to rise as companies regain access to U.S. chips. Traders are now waiting to hear from Nvidia boss Jensen Huang, who is set to deliver a speech in Beijing. Good morning. Welcome to the show. This is pretty much a story that really sums up quite nicely the story across equity markets currently. It's tech, AI, and then everything else, right? Given just the ever-changing contours of these trade conversations taking place, what is a clear winner though so far has been AI. We talked about Nvidia, TSMC, on top of the gains yesterday and overnight, so we're opening up 1% higher. That's lifting the TAIEX index, S&P futures, and the rest of the Asia Pacific, as you can see, either range-bound or more to the downside. The other big story, of course, in the macro space, given everything else that's taking place, is this melt-up we're seeing in the long end of sovereign yield curves, right? U.S. 30-year, of course, was the big story overnight, up about 5%. We are seeing, to a large extent, of course, some parts of the region here also seeing a melt-up in yields. The 10-year yield in Japan at about the levels this time yesterday. The 30-year and the 40-year is what we're watching very closely. It's about 369, give or take, here on the 40-year yield, which we're tracking closely. Beyond that, we're back to fairly decent superlatives as it pertains to generational highs. Quick glance at the U.S. dollar right now. As you can see, some weakness coming through after 4 days of gains on the Bloomberg Dollar Index. Again, tech and what happened overnight, 3%. And as you can see, some stocks we're tracking going into the open today. And that being said, have a look at futures right now, and we are actually now a good day or two away from taking out the March highs in the Hang Seng Index. Might not happen today. We'll see, of course, what happens. But yes, we did close above the June highs in Hang Seng Index, and a little bit more. We could see, Yvonne, this week perhaps a new highs here for the Hang Seng Index, but we'll see.
Yeah, we'll see. I mean, it continues to be the story of, I guess, southbound flows and the like that really continue to drive Hong Kong and the likes higher here. But yes, we're also seeing catch up in the A-share market as well. Let's get to your top story here this morning. President Trump says he's likely to impose tariffs on pharmaceuticals as soon as the end of the month, and that levies on chips could come soon. Earlier, he announced a deal with Indonesia that will see its exports to the U.S. face a 19% tariff.
Indonesia was great. He's a great president, and we made a terrific deal where they opened up the entire country to trade with the United States. We weren't allowed to go in and trade. I think something similar will happen with I would say, India.
Let's get to our news desk editor, Jill Deeses. She's with us right now on the Indonesia side of things. So, I mean, this was one of the 24, I guess, trading partners that did receive letters. I think initially it was a 32% levy. Now we're talking about 19. What does this tell us about how these negotiations are going?
Yes, that's right, Yvonne. And I think that's the right way to think about it, too, is what this can tell us about potentially what this may mean for other nations that did receive letters. Because, I mean, in aggregate, I think U.S.-Indonesia goods trade is somewhere around $40 billion last year. So this isn't one of the U.S.'s biggest trading partners. But it is one of the countries to receive, as you mentioned, one of those letters. And so when those letters first started going out a couple of weeks ago, I think the idea was maybe, I guess last week, really, the idea was maybe that gives these nations time to negotiate something new ahead of this August 1st deadline. It does seem like maybe we're getting that if they got this 19% rate. Although I do want to caution everybody once again, we don't have a white paper for this particular agreement. We've got some basic details that Trump is saying. We've got the Indonesia side saying that they're preparing a joint statement. So maybe there's something more coming there. And I also want to remind everyone that we were in a really kind of similar-ish position last week with Vietnam, where Trump Trump, kind of front runs this idea of an announcement, 20% tariffs on Vietnam. And, we were hearing, just a few days later from people familiar that Vietnam was actually caught by surprise by that 20% rate. And they're still trying to negotiate something lower. So, yes, while this latest rate on Indonesia that Trump is imposing is, is again saying that he's agreeing to is somewhat lower than what that letter said, I do think there's a lot of open questions about how much room there may be to negotiate. And I still do think we really need a statement from Jakarta before, we really kind of know for certain what may or may not be in this deal. And once again, as with all of the agreements that Trump has announced so far, whether it's this or Vietnam or the UK, it's maybe that does, involve some kind of, element of the tariff rates, but there's still so much more, including, as we've been talking about, some of these potential sectoral tariffs that kind of come into the equation. So the story doesn't just end with this announcement of this deal. There clearly is probably some more to come.
We keep talking about how this, and I think, a few weeks ago, Vietnam's could have been a template for what we're looking at ahead. And two things come to mind. I wonder if you could talk us through this. So one is, it's not clear, at least to me, what Indonesia will be getting from this. Number two, is it just me, or is the baseline effective tariff seem to be creeping up from 10 to 20?
Yeah, no, David, I don't think it's just you. I think investors are also thinking this as well. I mean, when you're looking at, some of these tariffs, remember, I realize it now feels like eons ago, but back in April when we were talking about, potentially as a starting point, a 10% global baseline tariff, that kind of seemed to be where we were starting with. And then obviously there was room to negotiate within all of these additional reciprocal duties that Trump was imposing. Now, though, if, the direction of travel seems to be, okay, well, if Vietnam's getting a 20% tariff, Indonesia's getting a 19% tariff, then yes, I would agree with you that it does seem like maybe we're kind of normalizing around a new baseline rate for countries. I do have to, again, add that, a lot of this comes down to the Trump executive order side of things, so that reciprocal tariff side of things. So that is, I think, pretty widely seen as, domestically in the United States, the types of tariffs that are more likely to meet legal challenges than, say, those sectoral tariffs. But then when you start to bring those into the equation and you're talking about 50% tariffs on copper, potentially 200% tariffs on pharmaceuticals. That's another part of the question. The other thing I'd say, as with Indonesia, so what Trump has said is they've agreed to purchase $15 billion in U.S. energy, $4.5 billion worth of agricultural products, and 50 Boeing jets. Although I think there's still a lot of questions about what exactly is involved in that Boeing jet deal, particularly because the state-owned airline in Indonesia still has some Boeing MAX jets on order that they never received from some years ago. So again, lots of questions here.
All right, Jill, we got through a lot. Thank you. Jill Dees there, our news desk editor, to really kind of bring things up to speed for us here. And in terms of the agenda here today, it is still about an earnings story. Certainly we'll watch what close on when it comes to the likes of PopMart. They came up with a pretty interesting forecast, right? They're talking about a 350% surge in profit thanks to, we're talking about Labubu's. All right, Jensen Huang, though, he's in China. He stepped down in Beijing, and we are likely to see maybe some sort of speech or the like we'll see in the next hour as well, of course, on the back of them getting that green light that they can start delivering some of these H20 chips to China, or at least resume that as well. So that's certainly the Nvidia story is still very much live here today. Albanese in China will continue his trip as well. HKD and HIBOR, right? So we did see another intervention from the HKMA. We'll watch, of course, honky dollar, what this means for HIBOR. That certainly does lead to maybe more liquidity here in Hong Kong if we continue to see rates lower, right? And then sectors we say biotech still hot, hot, hot. Batteries and tech, there were some export controls that were put into place that China has added. So watch out for those sectors too.
Yeah, and to the point we were making on tech, the AI story really permeates across these Chinese markets. Alibaba is now called slightly higher to the upside, massive move up overnight. A lot of the AI plays in focus, and certainly the big story here was Nvidia and AMD as well, saying that they have received assurances that the White House will allow them to export some chips to China, marking a dramatic reversal of the previous stance coming out of the White House.
You might say that that was a negotiating chip that we used in Geneva and in London. It was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the Vice Premier, in the next few weeks.
The China market is so large and it's so dynamic. AI is moving very fast in China. So many AI startups, all of the cloud service providers. Alibaba is doing, QN is doing so well. Tencent is doing so well. Of course, my good friends at Xiaomi, they're doing so well. AI is being applied to everything from consumer applications, internet shopping, grocery delivery, to, of course, self-driving cars and all these incredible applications. And so I'm very happy to see the AI development here in China.
Let's get more context here now, and certainly more details with Annabelle Jewellers, of course, our tech correspondent here with us, of course. And, this is not a coincidence that Jensen Huang is in Beijing.
Not a coincidence he's in Beijing. Not a coincidence he went and visited President Trump just before he went to China as well. So the timing of this, of course, you can say it's fairly planned, but it's a big positive for Nvidia. It's a big positive for the likes of AMD as well. And you heard there that he was speaking to CCTV shortly after this announcement, or just around this announcement taking place, and he was really very positive about the outlook for AI in China. Of course, it's a major market for Nvidia, making up around 13% of their sales in the last year, just directly to China alone. But we will be hearing from him actually because he's in Beijing for a conference. That's the International Supply Chain Expo in Beijing. It kicks off this morning. He could be speaking maybe in the next hour or so. But yes, as our analysts have been saying at Bloomberg Intelligence, this is something that really could help Nvidia make up this shortfall that they'd already highlighted or flagged, given the lack of sales of H20 to China. So they were looking at maybe a shortfall of $15 billion for the full fiscal year. Same for AMD. I mean, just in the second half, they were looking up to $900 million. How much of that can they now claw back?
Obviously, he's sending a good message to who he talks to in Beijing. Is he going to be just kind of rushing to make these deals? Or what do we know right now in terms of the business in China for NVIDIA? What can they do?
Yeah, that's an interesting question. I mean, certainly their H20 chips are really important for inference. So they're really important for the training or the deployment of AI models. And that is really critical because that's where you're really at in China right now. You're moving to that application layer. So how much diffusion can you see of AI taking place? It's going to be, as he's already mentioned, some of those interesting companies like the likes of Alibaba, for instance. Xiaomi, you saw that stock market reaction as well. So yes, I mean, generally it can be seen as a positive because NVIDIA's chips are still superior, and you heard that from Scott Bessent as well, but just saying still superior to what Huawei has in the market right now, and that is the strategy of China, or Washington rather. They want to have companies, including Chinese companies, that continue to build on AI infrastructure, and that's what stops Chinese companies from catching up.
And just quickly, speaking of semiconductors, what time is it? 9. So in about 4 hours from now, Dutch company ASML will be reporting earnings. This
is a very interesting one because ASML produces, well, they produce lithography machines, but they produce very high-end lithography machines. And we had a report earlier this week from a US think tank, but they were saying, and we know this to be true, but essentially this is one of the key bottlenecks for China. They cannot make these lithography equipment to the same extent that ASML is able to do. They are critical to the manufacturing of semiconductors. What's interesting, though, for companies like ASML that are compliant with these restrictions that are led by the US, that they don't send their most advanced machines to China. But what signal does it send if the US is also prepared to roll back some of their own restrictions? It puts companies like ASML in quite a tricky place moving forward. But definitely, you've seen that reflected in the stock price because it's down around 30% over the past 12 months. Analysts are a bit concerned around, okay, you've got that high-end demand, but the customers for those machines, Samsung, Intel, TSMC, I mean, the first two I said are facing issues right now in this space.
Yeah, and you got to wonder now that the U.S. has, I guess, changed a little bit their stance on how they look at these export curves. What does it mean for the likes of Netherlands and Japan, which kind of agreed on this sort of path to try, right? Yeah. Maybe the compliance is going to be an issue, whether they actually continue on with these curves regionally as well. All right, great stuff. Annabelle Jewellers, our tech correspondent, with the latest on Jensen Huang. I just want to bring you some live pictures out of Beijing right now. So it looks like the Australian Prime Minister, Anthony Albanese, he's at the Great Wall right now, maybe checking out the scenes and views there, but certainly, talking a little bit more about this trip. I mean, he's been able to really kind of sidestep some of the thornier issues related to the U.S.-China competition here right now. His focus really has been on business and trade opportunities so far.
Yeah. even though it seems like he's there for golf.
He's very casual.
Yeah, there we go. He's been a nice casual cap. For most, at least, of the pictures we've seen so far. We'll leave this there for now, and of course, this is something we'll track very closely throughout the course of the session, including, of course, later on separately, as Bell was pointing out, speech coming through out of Jensen Huang, going into the Open today, 15 minutes away, the Wednesday session. The opening bell, Shanghai, Shenzhen, and here in Hong Kong. This is The China Show. Good morning. Good morning. Welcome back to the show here. So, yeah, the top market themes of the day, right? Muted U.S. inflation, although you do see some elements of maybe some of the tariffs starting to show up in U.S. inflation. Trade deals across the region. Of course, Indonesia is the big story today. We've yet to hear, though, from the Indonesians. We've had a UBS upgrade out of for Chinese GDP, and of course the AI stock rally. We talked about Nvidia, TSMC, and might we see that in Chinese tech today? The key market themes as we go into the session today here.
Yeah, there's so many themes, right? Let's bring in Ecaterina, Bigos, CIO for Asia, ex-Japan Core Investments at AXA Investment Managers. Take a look at all those market themes right now. What's going to be the key thing you're watching out for the rrest of the year?
Well, I think it's still the same key catalysts that are going to drive outcomes. You know, it's obviously tariffs are in the front stage for investors. We have obviously fiscal policies, which are certainly important, and obviously tech is driving outcomes and is going to continue to do so because, again, it's still a prevalent and a secular theme that investors are looking at, and certainly there's a lot of dynamics that are going to evolve into year end.
I'm looking at some of the things you've scribbled here, and I wonder if you could just translate this to simple English.
Yeah.
So alpha, we are not in beta markets right now. So for our viewers, what does this mean exactly?
Yeah, and I think this is security selection and sector selection, country selection is key, right? We're not yet in the market where everything rallies across the board. And one of the questions in previous interviews, are we going to get in double-digit returns? Well, some parts of the market, some countries are in double digits already.
Yeah.
But you need to be selective. It's not situations where everything across the board is rallying. We could get into a situation, potentially in the U.S. in the later part of the year, if we get a Fed cut that is non-recessionary. You know, I think market, it just lifts all the boats, if you might say. High tide lifts all the boats. So for now, we need to still stay focused around what are the tariff implications, what are going to be the fiscal implications, and later what's happening in tech.
How are you seeing that in earnings? Have you seen any sort of tariff pass-through or impact on earnings so far?
So in terms of earnings, I mean, by and large in the U.S., tech is still expected to be the leader in terms of that delivery, around 14%. The broader market is expected to lag. And I think for the market to broaden in terms of earnings recovery, we need to see leverage coming back, confidence coming back. So we need to see a resolution of tariffs. We also need to see that the Fed has room to maneuver in the second part of the year, which is the expectation. And that will allow companies to start to deploy back into growth, and I think that's where. And I think one part that we shouldn't forget is the big, beautiful bill that has actually provided some new catalysts with tax exemptions, with some of the amortization of equipment R&D investment for some industrials. Again, it's creating a new theme for U.S. is industrialization of U.S., and I think that is something that could emerge in the latter part in 2025, but also in 2026 and onwards.
We talked about Nvidia here since yesterday, and I wonder, and to your point, we have new catalysts right now in other parts. Is U.S. exceptionalism back?
Yeah.
I think it's still tech is keeping that alive for sure. And I think the resolution, what is key, as I said, I think the resolution of tariffs, and again, not an escalation from where we are now, but I think it was a positive resolution of tariffs. From that, I think will give a lot more scope for U.S. to recover and continue. And again, we'll potentially not play with inflation. Inflation is a risk, but a positive resolution of tariffs, I think, will keep that under control. We'll allow Fed to continue to normalize monetary policy, which is key. And the last and not least, again, we need to look at in terms of what are the corporates, the ability of corporates to start to deploy into growth, and again, leverage coming back, more shareholder-friendly activity to come back, like M&A, which again is dependent on those elements that I've just talked about.
So what's the sort of advice to clients now? Is it to diversify or not? I mean, and where to? How much allocation should I have in the U.S.? And for the most part, how much to hedge too right now?
Yeah, we need to be selective. Again, I guess I said it's not a situation where we're going to go all in into, and again, talking about bidder markets, again, we need to look at sectors. I think tech is expected still to stay resilient, and we're constructive. This is a secular theme that is going to continue to deliver for years to come. Again, we need to start to look at industrials, financials. We've seen the results yesterday. Yeah. They are going to stay resilient, again, because the Fed has delayed the normalization of policy, which is good for net interest margins. And also we have financials which will potentially capitalize on activity starting to pick up on IPOs, M&A, and we've seen already in Hong Kong record the IPOs starting to materialize, right? So I think this is something where financials will stay resilient. And the latter one, I would say probably in some order, to order degree tech, I would say financials are a good place. And I say the part of the industrials that I've talked about, I think it stands to benefit in the longer term for US, all in place,
I was going to ask you about treasuries, but now like JGB seem to be sort of the other part of the rising yield story. Which one do I need to worry about as a global allocator? Which one might have, I guess, global-wide disruptive capacity?
I think if I had to say, and this is a generalization, if you were to say U.S. Investors, if yields reach a certain level, for U.S. treasuries, investors will deem it as a good value, and they'll tend to step in. And one thing as well, when you look at investors in U.S., the pool of investors for treasuries is much larger. So you have private investors, you have even retail investors, you have institutionals, you have foreign investors. When it comes to Japan, first of all, 50% or largely 50% of that is owned by Bank of Japan. A lot of it is home-driven. I think about only 18% of is owned by global, so very small portion of that. So when it comes to harnessing that value opportunity, I think it's going to take slower time to bring the yields down. And I think there's for JGBs also there's a structural problem of demand. A large part of the investors there were insurers, and that is started to unwind in terms of demand from that part of the market.
Okay. Ecaterina, Bigos there will be staying with us for some final thoughts in a couple of minutes here. While we get into the session today, 7 minutes away, give or take 6 minutes away now, futures are now pointing, and Hang Seng Index at 24.7 now, 0.5% to the upside. Plenty more ahead. This is the China Show. Right, welcome back. So yesterday we closed above the June highs of the Hang Seng Index, and right now at 24,704, actually now puts us at about the midpoint between the level then and this high that we had back in March. Above that, it's fresh 2025 highs. Let's see what happens, of course, when we get into the open. 113 points right now to the upside, Yvonne.
Good here right now. Take a look at how Asia's tech is doing. We're also up for a fourth straight day so far. Looks like, gotta thank Nvidia for that as well. We got the open coming up. This is Bloomberg.
Right, welcome back. Happy Wednesday. When is it?
It's hump day.
Yes, there we go. Okay, that's the important thing. That's the important thing. It's we're looking at some upside right now going into the Hong Kong Open. So yeah, we're very close now to setting a new high for the year on the Hang Seng Index. A50 futures are flat. The rest of the region, though, either flat or slightly to the downside, with the exception of tech, of course, which has re-emerged as a catalyst in the last 24 hours.
Yeah, you really got to thank Jensen Huang and all the lobbying he's done maybe the past few months to try to kind of get this green light right of its H20 chips, resuming that sort of shipment to China. That certainly is going to be the key catalyst here when it comes to the tech space, AI trade, and the like. And then you got to add on to the economics are looking a little bit better as well. That GDP print that we got out of China yesterday, just fresh off the press, Morgan Stanley, they also upgraded their growth forecast for 2025 to 4.8%. Robin Shing and his team there, UBS also overnight raising it to 4.7. So fundamentals looking a little bit good. We'll see what happens, of course, the rest of the year because, certainly the tariff impact is one thing. You take a look when it comes to how onshore markets are doing. We're pretty flat right now. We're watching very closely what goes on in the tech space in Hong Kong. But really, when it comes to some of these large caps like CATL, that's slightly to the downside today. Kuei is catching a slight bid. Iron ore, we're seeing gains about 1%, but crude is heading the opposite direction. So, but right now, it seems like for the most part, we're looking okay. Take a look at when it comes to Hong Kong, though. That seems to be where, a lot of the, conviction is here right now. Look at HS Tech. We're up 0.8%, up another day as well. So 8 shares are up about 0.7% here this morning. Take a look at how the tech space is going. Alibaba's up 2.5%. Meituan up 1%. Baidu's up 4% right now. The Nasdaq Golden Dragon was on fire yesterday, where you actually had some of these big names up close to two digits and the like. So there you go. And you take a look at how the chip space is kind of faring, right? So if Nvidia can start resuming some of their orders and chips to China, what does that mean for some of these local players like SMIC, Huang Semi? They were one of the few stocks that actually declined yesterday. It looks like we're seeing another day of that for the likes of Huang Semi and SMIC as well. In terms of developers, so there was that 2-day meeting. So much speculation that there was going to be some sort of stimulus. Looks like it's short of expectations, right? They talked about this whole new model of property development, about renovations and the like. Nothing in terms of what we thought would be maybe like Shantytown 2.0. So there you go. Maybe a bit of sell in the news right now, Dave.
Yeah, okay. Let's wake our viewers up even further and talk about convertible bonds now. It's emerged as one of the most popular asset classes in China this year. I'm being serious this time now. Beating the performance of local stocks and also fixed income. Charlotte Yang, our equities reporter, is here to talk about this trade. What's going on here?
Yes, so Chinese onshore convertible bonds are having a moment this year, and it's a pretty big one. So, while you're looking at local stocks and government bonds posted only modest gains, you see the benchmark for Chinese convertible bonds gained nearly 8% this year, and that has pushed the index to trade at near a decade high. So what's behind the buzz? We're seeing surging investor appetite as the credit risk has eased for some of the smaller players, as well as the rally in bank stocks, as well as the small cap, which are the key big components for the index, so that has been helping the demand. And market watchers also say that some foreign investors who don't have convictions in the Chinese equity market but wants to get some of those upside, convertible bonds is also a way for them to play safe. But what's interesting that as demand is surging, actually we're seeing some supply strains because of those shares rally, especially for the bank convertibles. There's early redemptions as well as maturity. Actually, there's more demand for supply right now, and also you have the Shanghai Pudong development CV that's approaching maturity October this year. That's going to accelerate the problem with the lack of supply.
Yeah, interesting. Also, when it comes to earnings, right, we've been kind of breaking everything down, but one that really stood out to me this morning, I'm sure it's caught your eye, is what's going on with PopMart and the guidance that they're giving. And we're seeing analysts now all changing their price targets, it seems.
Yeah, so PopMart's profit alert, which they're expecting, sales to more than double for the first half, is not only strong, it's like Labubu level explosive. And analysts are feeling very bullish. You have Morgan Stanley, JP Morgan, Citigroup, Jefferies all raising their price targets. And basically, they expect the solid momentum to continue for the second half despite a higher base. And that's because they're seeing, sales surging globally. And so, but they did say that because the stock has gained almost 600% over the past year, so there is that profit risk, taking risk, but they feel like that would be a good time for longer-term investors to actually build positions, given the strong outlook for this company.
All right, Charlotte. Thank you, Charlotte Yang there, Asia equities reporter, and Labubu reporter as well.
Yes.
She always gives us updates of what's going on
they should,
in the world of Labubus.
We've been talking about how officials are looking to curb supply of certain things. My personal opinion, they should look at this specifically. Too much of them going around. But who am I to talk anyway? I'm just hating here, am I? Just ranting. Uncle is ranting again.
Not jumping on the bandwagon.
No, clearly.
I'm just imagining you walking into work with your plastic bag and Labubu kind of hooked onto it. No. You haven't noticed David on the streets. He likes to carry his things in a plastic bag.
Yeah, anyways, me in the white. Yeah.
We got to talk about the upgrades, right?
Yeah.
That we're seeing in China.
UBS, Morgan Stanley.
Certainly it's been interesting, right? Because we're not quite seeing that sort of tariff impact just yet. And it seems like the front loading and everything is keeping things quite rosy, right? But underneath the hood, maybe that's where people start to worry about those things. And is it really more about the domestic things that people are worried about when we talk about price wars, anti-involution?
Yeah.
I think Shuli had a really great piece this week that said, that's actually more of a concern for policymakers than tariffs itself.
Yeah, it is. This, even amidst that, they're reaching a growth target, which is probably an issue if you're looking for more stimulus to come.
Yeah.
Because despite that, we are I think, on track still for, to meet the growth target there, given what's happening as well. But, markets might be wanting something else beyond what the economy needs is the other point, right? So it remains I think, in many cases, still a trader's market, still tactical trade. But yes, there are opportunities in this market. We're now looking at, let's talk about what is in store still. With some final thoughts here from Ecaterina Bigos here, CIO for Asia ex-Japan Core Investments. So we haven't talked about China just yet. It's did well first few months of the year and then entered this period of it being range bound. And it looks like we're breaking out.
Yeah.
How are you looking at Chinese equities right now?
Yeah, and I think this is ultimately the catalyst for China. We call it an emergence of self-sufficiency theme. And when we look at that is obviously for China, it needs to look at stimulating demand onshore. And I think this is key. We talked about it, the importance of it. And it's not just good demands, but also reviving the sector. The services sector is quite important as well. Then diversifying supply chains. Obviously, we've had a respite of tariffs, but also it's critical for them to drive a diversification of supply chains and be a little bit more less susceptible to tariff risks. So all of that, and then you have technological advancement, particularly with that element of overcapacity. I think China will aim to redirect themselves into a higher value manufacturing. Yeah. I think all of those three themes are going to catalyze into outcome. The broader market is still challenged because, of course, we know that deflation is present and that overcapacity issue is going to stay present till the year end and potentially in 2026.
It seems like what stood out this year in China is new consumption. It's tech, biotech. It's AI, it's biotech, right? How should I be thinking and positioning around those sort of things?
Well, ultimately, I think is driven by that the DeepSeek, the moment, obviously the DeepSeek and the implication it had on tech and the broader excitement and ramifications on that on digital platforms and so on and so forth. And the second one is policy, right? So I think policy was the catalyst to some of the sectors and that innovation, tech innovation that I talked about, it's a biotech. But I think one part to be cognizant about biotech is obviously tariffs that potentially could come from the US. And I think investors need to be aware that we're not yet at the resolution of tariff tensions with China.
And is it more now Hong Kong that's the play for China, or has the pendulum swung too much in Hong Kong's favor that there's now value onshore in the Asia market?
For now, it definitely there is. It seems that Hong Kong will lead for now because, again, we've talked about those themes as still being the key themes going to drive the market into the year end. And for the broader market in China onshore, we need to see a reflation. We need to see that inflation coming back and overcapacity being removed. And we've seen some indications that they will address or supply side reforms, which is a longer-term story. It will take time to materialize, but that could have implications on A shares and kind of more stable kind of value companies that exist there onshore.
All right, Ecaterina, we got to leave it there. Ecaterina Bigos there, CIO for Asia ex-Japan Core Investments at AXA Investment Managers. We got plenty more ahead. This is Bloomberg.
Yesterday was an opportunity as well for us to develop the relationship between Australia and China. I've said consistently that we'll cooperate where we can, disagree where we must, but engage in our national interest. It is very clear that it is in our national interest for us to have a positive relationship with China, where there are differences, to talk about them but not be defined by them. And that is critical going forward.
And that was Australian Prime Minister Anthony Albanese there talking moments ago at the Great Wall of China. And earlier he did say that he's keeping the focus of his China trip on business and trade opportunities. In his meeting with Chinese President Xi Jinping, Albanese reaffirmed his commitment to a positive and constructive relationship with Australia's largest trading partner. Meanwhile, the White House says President Trump was only asking a question and not encouraging further killing when he asked Volodymyr Zelensky whether Ukraine could strike Moscow. A source told Bloomberg that Trump quizzed Zelensky about whether Kyiv could hit the Russian capital and St. Petersburg if given U.S. long-range weapons. The conversation took place a day after Trump said he was, quote, very disappointed by a phone call with Putin.
Meanwhile, U.S. Treasury Secretary Scott Bessent says talks with Beijing are in a good place. He says the market should not fixate on August 12th, the date, of course, of the current tariff truce is set to expire. Now, he also told us that the agreement to let Nvidia resume selling its chips to China was part of broader negotiations.
I can tell you the one thing that we do not want is a digital Belt and Road springing up around the world because other countries or China are substituting for our American chip manufacturers.
This is the same chip, though, that the Trump administration blocked with export controls in April. So why the change in policy now?
Anne-Marie, you might say that that was a negotiating chip that we used in Geneva and in London.
So this was part of the trade talks when it comes to Washington and Beijing?
Yes.
Was it a quid pro quo then? As you said, it wasn't, but was it potentially to make sure that you can get the licenses when it comes to rare earths?
Yeah, I think it was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the vice premier, in the next few weeks.
So when and where will that meeting take place?
We're still working on that. The Chinese leadership has a big conclave at the beginning of August, so we're trying to work out whether that could be in a third country before or after that conclave.
Will the administration release the framework of the Geneva and London talks?
Well, we have released some of it, and I'll tell you that now having settled on tariffs, on the export controls, we can move on to the next stage of talks. And I think it's very important, both for the global economy, for the U.S. economy, and for the Chinese economy, for us to move on and talk about China opening its markets and the increased domestic and consumer production there.
Are you hoping to get to that next phase before August 12th, when that's currently the détente between these two economies?
Yeah, I think we're in a very good place, and I tell market participants not to worry about August 12th.
No.
There we go. That was our colleague, of course, Anne-Marie, speaking with the U.S. Treasury Secretary Scott Bessent overnight. Right, 14 minutes into the session, and we've now taken out milestones here on Hang Seng Index. And if we do remain at least at these levels, at the minimum, we will be closing at the highest level here since 2022. So we've taken out 24,750, give or take, and we've now taken out 24,800. It's worth pointing out, though, the tech space is leading this and really driving this further. But as far as mainland buying is concerned, we're net sellers now so far across the Stock Connect. So negative flows so far. We'll see if that changes, of course, going into the rest of the session here.
Yep. And of course, we're going to take a look at when it comes to one mover, Baidu. So we saw a big move there. So there was a news of this multi-year partnership with Uber.
Yeah.
In terms of autonomous driving. And so we're talking about robo-taxis and the like here. So Jeffrey's coming out with an interesting note saying it's a positive for the stock. It really demonstrates the firm's leading position in autonomous technology. And the move allows Baidu to really bear fruit over the 10 years of investments in the space as well. That's why the stock is up some 4% right now. Subscribers, you can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities and Bloomberg functions that we talk about. Become part of the conversation. Send us a message, questions, anything. Check it out on TV Go. Well, the founder of Chinese edtech firm Squirrel AI thinks that the DeepSeek boom earlier in the year helped make people, especially parents, more aware and accepting of AI. Derek Lee spoke exclusively to Bloomberg on the company's expansion plans and the impact of China's 2021 crackdown on the edtech sector.
Actually, that policy gave us time very hard like hell, but indeed, it actually helped us. So when the policy shut down the tutoring center by human, actually it's a very good chance for our AI virtual tutor to boom. Especially and at the beginning of this year, everybody know DeepSeek, all the parents and all the kids now, they understand AI more and they think AI could, or perhaps most probably, to replace the best human teacher.
Now you're at a point where you're looking to expand the business into the US, or you've started expanding into the US, but share or give us an update on how that's going so far.
From the beginning, 11 years before when I started Squirrel AI, our AI center is actually based in US. So our structure and the product, the base is international. It's very suitable, also suitable for US market. And I think we want to start it from the mass because, the Asian mass is good. We are hoping that we can have more than 3,000 after-school learning centers in U.S.
We've seen Chinese companies or Chinese tech companies in the U.S. face issues, thinking about, for instance, ByteDance's TikTok, Huawei are some of the more prominent examples. You've certainly taken steps to mitigate any concerns by storing data locally, for instance, working with American franchisees. But is that going to be enough? And what kind of conversations, or have you had any conversations with Washington as well?
Actually, we just started. We haven't have conversation with Washington, but we made our own strategy. That's why we do not entering the school market. We do not try to persuade the education district because that is very hard for us. Why we started from the learning center, the after-school tutoring centers is so that is not so sensitive.
I want to ask as well about your investor base, because your largest investor, or among your largest investors, is Jeff Yass. He's someone who's quite close to Donald Trump or has ties into Donald Trump. Does that help you at all with any sort of regulatory hurdles you could face?
Yeah, sure. SIG actually invested us in 3 rounds all along, like they invest TikTok in 3 rounds consecutively. Of course, the relationship with Trump will be a very good thing for us. So I'm looking very closely how TikTok will do in the next. If they go through very well, that's a very good news for us.
What kind of financials can you share for us in terms of revenue or margins or profit as well?
Last year, our revenue of the distributors reached $300 million, and our gross margin is 70%, and I cannot mention the net margin now, but we will clear it when we prepare to IPO.
And talk to us about that IPO. What's the timeline, and as well, what's the venue that you would look at?
We want to, the time we prepare to IPO is we want to have at least 200 learning centers in US. So we want to start it maybe next year, and we also considered whether NASDAQ or Hong Kong stock market, which is better for us.
All right.
Yeah, that was yeah. You want to go for it?
No.
That was Derek Lee of Squirrel, of course, speaking with our Annabelle Jewelers here. Okay, just some breaking news to tell you about here. So the TAIEX index, just to mention, is above 23,000, perhaps down to this headline coming through that Taiwan aims to reach a deal with the U.S. before the deadline, which comes in August 1st, as you can see session highs here on the index itself. Yvonne.
Yeah, why it's important is because the latest batch of what we heard in terms of letters and threats, Taiwan was notably not mentioned at all the last few weeks, right? So is it a sign that things are going well between the U.S. and Taiwan and their negotiations moving forward? Obviously, it's 32% was the initial sort of rate that was set back in Liberation Day. They've always hoped for maybe a baseline of 10%. But when I spoke with the deputy foreign minister back then a few months ago, they mentioned, look, we hope to be that special someone, right? We want to be, given our partnership and our relationship with the U.S., we want to be something maybe possibly even lower than that right now. So we're not getting any details so far as of yet, maybe just timing, that maybe we will likely see something before August 1st.
According to the deputy trade representative telling lawmakers right now, but again, as Yvonne was pointing out, the important thing here is before the deadline, yes, but we don't know the contours and the details of any sort of deal. And of course, the chart from Donald Trump back on Liberation Day was Taiwan was at 32%. And do we treat it as something encouraging and positive if we do see that fall below 10%? We'll have to wait and see. Markets, though, are obviously on the front foot before this came through, even more so right now after this news has come out as well. Right, as we go into the second hour of the program here, it's also worth pointing out that when you talk about this Indonesia trade deal, right, apparel stocks are very much in focus. As you can see, that's leading to some gains. Then, of course, just to mention, the Indonesian market opens up in the next few minutes, so stay tuned for that. That open, and of course, there's a rate decision as well coming through out of Indonesia today. Benchmarks in mainland China and here in Hong Kong. Hang Seng Index is now trading at the highest level in 3 years. The second hour of the China Show is just ahead.
Welcome back to the China Show. Here's a look at the HSI half hour into the session. And, Dave, if things go the way that they are right now...
Where are you going with this?
We are going to head to the highest levels in 3 years, February 2022, for that benchmark here. So really just showing this rebound that we're seeing. Okay. In risk sentiment, of course, signs of easing the U.S. trade tensions, and I think really the Nvidia boss in Beijing, that certainly is helping things too this morning.
Yeah, who would have thought, right? Who would have thought that that would have been the catalyst? But then again, I sort of rethought overnight what happened yesterday. We were sort of pointing to Nvidia and that news being the catalyst in markets. But if you boil it down, it was really China asking the U.S. It was a China factor that led to then Nvidia being able to then go to Trump and then come back to Beijing and says, yes, we got what you, in some ways, what you wanted. We'll talk more about that in a moment with Belle here. She's joining us in a couple of minutes here. While that's taking place separately, we're hearing from the deputy trade negotiator in Taiwan here that they are looking to secure a deal, no details given, before the deadline on August 1st. TAIEX index also catching a bid of 23,000. First time we're trading above this nice whole round number since Feb of this year. So, yeah, we're getting a lot of progress on these trade conversations, and maybe that goes into this sort of Indonesia story, which was the one we woke up to into this morning. But yes, there we go. We're looking at TAIEX index and also dollar Taiwan trading at 29.30 as we speak. Okay.
We got some breaking news here. This is according to our sources here when it comes to Vanke. So they are seeking now to extend some of this domestic bank loans by up to 10 years. This is according to sources here. And the move really that could really help the state-backed developer reduce the risk that you're seeing around liquidity here at the moment here. As of course, this week, we did talk about that when it comes to the first half loss of this year. They did guide and say that it actually may widen to as much as $1.7 billion. So really just showing the financial challenges there. So that's the latest there, seeking to extend some of those bank loans by up to 10 years. The stock, though, is slightly just higher this morning. Let's get to our top story here this morning, though, as well. President Trump says he's likely to impose tariffs on pharmaceuticals as soon as the end of the month, and that levies on chips could come soon. Now, earlier, he announced a deal with Indonesia that will see its exports to the U.S. face a 19% tariff.
Indonesia was great. He's a great president, and we made a terrific deal where they opened up the entire country to trade with the United States. We weren't allowed to go in and trade. I think something similar will happen with I would say, India.
Let's get to our Indonesia Deputy Bureau Chief, Claire Zhao, joining us here as well. It seems like this was a bit of a surprise in some ways, Claire, but what do we know more about this deal?
Well, what appears to be the clincher so far is really elevating the talks to the presidential level, because negotiators have been at this for a few months now. You have our ministers flying over to Washington to try and hammer out a deal. But what changed last night was President Donald Trump said he was dealing directly with President Prabowo, and that seems to have been enough. If you look at the details of the deal that Trump has posted about so far, it looks very similar to what Indonesia has proposed before. We're talking about $15 billion in energy purchases, increased imports of wheat, even about 50 to even 75 new Boeing planes for the state airline Garuda. So it remains to be seen what exactly the new details are so far that seem to have moved the needle for Washington. We're expecting President Prabowo to arrive in Jakarta sometime today to give more details on the agreement. But there are a lot of questions on what the timeline will be and how realistic these pledges will be. Off the back of our off the cuff, these calculations could show that could wipe out Indonesia's trade surplus with the U.S., which is around 18 billion as of 2024. But whether these pledges could actually happen and how soon they could is the question. For example, Garuda is still short on cash and hasn't really also gotten any of the Boeing planes it's ordered before. So it remains to be seen what progress would be made in this next deal.
Claire, before we talk about whether this is a template that we could maybe use for other potential trade deals in the region, I just want to ask, has the Indonesian side confirmed that a deal has been made with the U.S.?
So we're looking for a stronger confirmation. The closest we've gotten to that is them saying they're preparing a joint statement, and then Prabowo will likely give a briefing sometime today, but that's it.
Okay, so if I'm another, Southeast Asian country that's still kind of undergoing these talks with the U.S. right now, how should I look at this deal in Indonesia and frame how things move forward for, as a template possibly, maybe?
Yeah, so it seems like the clincher, as I said, is really elevating the talks to the top level with the president, but also the importance of really wiping out that trade surplus. That's been the figure that Trump and negotiators have been focusing on, that $18 billion in trade surplus that Indonesia had with the U.S. last year. And with $15 billion in energy imports, about $5 billion in agriculture purchases, that could just be enough to tip the balance.
Okay, Claire, thank you so much for the update there. Claire Zhao in Jakarta for us. I want to say Singapore. Our Deputy Bureau Chief there over in Jakarta. Right, part of the trade conversations, of course, and the big market moving story is really on the AI part of things. You had Nvidia, AMD, massive move up overnight, and this shifting stands out of the U.S. here as it pertains to what can then be sold to the Chinese market. This comes as Nvidia CEO Jensen Huang is in Beijing, of course, this week, speaking about those changes in the local tech scene.
50% of the world's AI researchers are here in China. And there are so many innovative and dynamic companies here in China. It's really important that American companies are able to compete and serve the market here in China. It's a great springboard for all of the other markets as well.
Let's get more now with Annabelle Julius, of course, our tech correspondent, here with us. And yeah, we are expecting, I believe, Jensen Huang to be speaking at some point today.
Yeah, so he's in Beijing, and there's an expo kicking off today. It's the International Supply Chain Expo that's getting underway in Beijing, and he is expected to speak perhaps even within the hour. But it's certainly coming at a very interesting time for the company, because you've had this big reversal of the US restrictions, and now they can start their sales with H20 once again. And so you saw, I guess, the optimism around that, because ASML have been flagging maybe even $15 billion in lost sales over the course of this year, or that was the expectation. How much of that can they now recoup back?
Yeah, so tell us a bit more about, is this going to be just flourishing business for Nvidia now in China? I mean, he's obviously going to be there to really strike some deals?
Yeah, I think it's going to be one to really track. I think it's sort of important to get down into the nuance of the restrictions a little bit more, because the main concern for the initial export restrictions that was put in place was the raw compute power of the H20 for the training of large artificial intelligence models. What's interesting, though, is, and that's why you had the restrictions in the first place, to try and pull back China's ability to train LLMs or foundation models. But the H20 is actually better in some ways, or at least comparable to the best on the market for inference. And so that's sort of like the deployment of the AI tools. Like if you put a question into ChatGPT, the response it gives back to you, that's using inference there. And so this is really the key point now. How much can that also help with the deployment of AI and the diffusion of the AI technology? And you see a lot of competition in China in that space around the application layer as companies try and monetize the technology. So will be interesting to track.
Are we looking for anything for him to say? Like, what are we keen to hear from Jensen Huang today? Apart from, of course, the big news he's already talked about, and maybe ties to how his business is doing in China. Yeah. What's that ecosystem looking like?
Yeah, I think that will be, yeah, I feel like he's stuck with that key message to the US, yeah. Which is he's kind of got two messages, actually. His message to the US is that if you continue to restrict US companies, rather, in China, you're only going to be benefiting competitors or possible competitors like Huawei. Obviously, Huawei's technology right now is not at the same level as what Nvidia can produce, or the major chip makers like SMIC, for instance. The message for the Chinese market is different, and you see that and we've seen this routinely, quite big overtures to the Chinese market, saying how advanced they are, saying the development, saying how much talent there is. So you probably can expect him to really stick with that today, given, of course, he wants to do business in China and he wants to try and sell more of these H20 chips.
All right, Annabelle. Thank you. Annabelle Jewelers there, our Bloomberg tech reporter with the latest. And still ahead on the China show, DBS's head of consumer banking and wealth management joins us to discuss the bank's strategy and what wealthy clients in Asia are doing with their money. This is Bloomberg. Well, of course, as we talk about this kind of all these sort of themes when it comes to the macro side of things, tariffs, AI, and really inflation, traders are really wrestling with this whole market volatility, right, when it comes to trade uncertainty. What does it look like when it comes to wealth management, for example, right? The story actually looks quite different. According to DBS, inflows from ultra-high net worth individuals more than doubled month on month following President Trump's so-called Liberation Day. So let's bring in Shee Tse Koon, a group head of consumer banking and wealth management at DBS. So tell us a bit more about how client sentiment has been like. You're saying things are looking pretty busy on your end.
Thank you, Yvonne and David. Lovely to be here. Yes, as we have been highlighting, post-Liberation Day, just barring that 1 week where there was some real volatility, we've actually seen very, very robust and strong inflows of wealth coming into the bank. Wealth inflows coming more than double month on month. And it's not just that. Actually, investment activities in itself has also picked up. So apart from net wealth inflows in our bank, customers have also been putting their money to work. We have seen, for example, very strong activities building on actually what was very strong activities last year. We saw last year alone a year-on-year growth over 100% of net cash being deployed into investments with us. And you might ask, what are customer sentiments and what are they investing into? Yeah. In reality, I'll say it is really in a broad base, based on our advice on customers diversifying their portfolio. So it's gone beyond just the plain vanilla investment instruments to actually interest in alternative assets. So we have seen customers starting to also diversify their portfolios into a broad range of alternative assets in private equity funds, in private credit funds, in infrastructure, in real estate, in gold. Over and above that, we have also, just this year, called on a certain theme on sports, media, and entertainment. And in April, we also launched a private asset fund relating to this theme, and we have seen interest in our customers as well.
Oh.
Is that an alternative?
Sports?
Yeah. What does that play exactly?
Well, actually, it comes from two angles. One, we often also look at emerging themes as we discuss this with our customers. Right. But when we say it was an alternative, it was because it was a private asset fund. So by and large, the alternatives aspect comes from beyond the public markets into an increasing interest in the private markets.
And I know alternatives have done well. I think the best performing strategy, if you had to sort of allocate as a group, maybe gold is part of that run. What's the advice then, though, generally speaking? I guess it depends on risk profile and investment horizon, but is the investment advice lean into the winners, or is there something beyond the winners already to entertain?
Well, actually, I would say a lot of this is probably a lot much better covered by my CIO, so I'm not going to go into kind of individual stock picks. But broadly, as far as the themes are concerned, the ability now to diversify the portfolio amongst our ultra-high net worth individuals from public markets into private markets, and within the private markets into that broad range. Yeah. Of course, focusing on a few themes that we have been also advising our clients on, right? Short-term duration investment grade bonds, certain themes like AI and tech, etc.
What about in terms of the wealthy mainland clients? I mean, what's the pace of openings been like here in Hong Kong? How many accounts have you opened so far this year?
Well, in reality, I'll say that if you look at our entire portfolio of wealth management, our customers hail from more than 120 nationalities. So I wouldn't say it is mainland Chinese per se. Yeah. Actually, our growth has been very, very broad-based across the various regions globally. So for all intents and purposes, we have got 2 booking centers here in Hong Kong and Singapore for good reasons. These are 2 very, very strong international financial centers, and there is an increasing interest that we have seen from all over the world, not just in North Asia, but in Southeast Asia, South Asia being India in particular. We've also seen from the Middle East and Europe a huge interest in shifting their wealth to tap into the growth of Asia.
And, I think it's really where you book the business, and I want to figure out where you guys are on this process of hiring RMs, right? I think you've set out a target of about 130. We're halfway through the year. How many have you hired so far of the 130 that you targeted? And I guess more importantly, as a window into where that business is actually being booked, where are you placing those RMs is the other question.
Well, I would say we are still a growing business, and our outlook is very, very positive. We do think that the momentum has been strong, and we still expect it to be strong. And for that reason, as you have talked about, we are building our bench strength as well. So with this 130, we probably have hired about good 70-80% of them. And where are they deployed is actually all over. So we have 2 booking centers in Singapore and Hong Kong. We do have our RMs both in Singapore, Hong Kong, Dubai, as well as London. And this is really to cater, as I've mentioned earlier on, to the client base we have from over 120 nationalities. We have recently just hired a very senior head for our business in the Middle East. Yeah. And we look to also be growing in that space.
Yeah, can you tell us a bit more about the hiring plans in the Middle East and any sort of, what do you see in terms of flows between the Middle East and Asia now?
Well, the flows are starting to come in. In reality, we already have a Middle Eastern business. We have a team there in Dubai. They're covered from out of Dubai as well as in this part of the world, depending on where the clients want to book. So the flows are very, very strong. There is an increasing interest actually in Asia. In fact, when I was visiting the Middle East last year, one client actually asked me, is Asia investable? I said, very, very much so.
The mainland Chinese going into the Middle East, is that how big of a flow are you seeing as far as that's concerned? Because we've seen the links start to reemerge and really connect over the last few years or so, and I'm wondering what you're seeing specifically from your end.
Well, actually, I would say quite a consistent picture is that many of these high net worth individuals are business entrepreneurs, business people in their own rights. In our own base, 70% of our high net worth, ultra high net worth clients are businessmen. And these business individuals already, for a long time, have had global presences in their businesses as well. So a lot of that depends on their business horizon. Some of them have got businesses in other parts of Asia, some in Europe, some in the Middle East. And for this reason, as they develop their businesses, there will be wealth flows that's associated with that as well. So many of these have got international needs, they've got onshore needs, they have also offshore needs. And being a bank as we are able to support them both on their onshore as well as their offshore needs from whatever they've generated offshore.
Right. And I guess just to ask, what else are your priorities and objectives this year, at least for the Hong Kong business specifically? I'm curious. And how do you? Very simple question. How do you differentiate yourself from all the others here in the city?
Well, there are a few ways we differentiate ourselves. One is because we are a full-fledged commercial bank. So in our wealth management business, we have this thing, what we call a wealth continuum, where whether it's customers' first $1,000, first $1 million, even to their first $1 billion.
Oh yeah, that's Yvonne.
Yeah, we have a unique value proposition to cater for these customers. So this wealth continuum is very, very real for us. So for instance, about 40% of our private bank clients that have been onboarded over the last few years have actually emerged through this whole wealth continuum. So we are able to help our customers grow or grow with them as they develop and deepen their relationship with us. At the same time, we are also, being a commercial bank, we have the ability to bring in our one bank approach, where I've mentioned earlier on 70% of our customers are business entrepreneurs. And therefore, we are able to also bring in our institutional bank because many of these clients have both their needs on the corporate side, on their private
personal
side. Yes. And it might be raising funds. It might be actually, frankly, doing an M&A. It might also be, in some cases, as they reorganize themselves, disposing some of their assets and then trying to monetize them in investment portfolio. We also differentiate from an angle that we don't just look at the current generation. Many of these high net worth individuals are starting to think about multi-generation, next generation legacy planning. So we have a very, very strong leading practice in family office, in trust, leveraging both investments and insurance solutions to bring a whole holistic package. And I think we do a pretty good job at that.
Tse Koon, thank you so much for taking the time to come in. Let's talk again soon.
Thank you, David.
Once we get an update
Thank you, Yvonne.
Group head there of consumer banking and wealth management at DBS. Right, let's get to the markets right now as we try and figure out what else is going on with these markets. Hang Seng Index, of course, at 24.8. Jensen Huang is, I believe, also speaking in Beijing. Let's put everything together for you, what's tradable today, what the winners are, and do we chase those winners? Mark Cranfield is with us out of Singapore to talk us through this. Mark, what's top of mind for you?
Yeah, the further that Nvidia pushes above 4 trillion market cap, the more relative value you have in people like Tencent, Alibaba, NetEase. So no wonder the Hang Seng is having a pretty good day here. It won't be long before it makes that 3-year high that you were talking about earlier. So yeah, I mean that's the read across for global markets, is that when you've got such a massive tailwind as you're getting from the big cap stocks in America, it's just positive really across the globe. Anybody in the AI tech space is going to look like they've got a chance of rallying on the back of that. So the further the big American companies go, the good news it is. And if you look at Tencent as well, Bloomberg Intelligence is saying that the gaming numbers for June were very positive for both Tencent and NetEase. And with their earnings coming up in a few weeks' time, people are going to be pretty excited. They're going to expect some good numbers coming out. That's going to keep the momentum going in the near term, particularly with the trade talks between the US and China seem to be going reasonably well. At least there's been no big negatives, which again is the flip side of that is it's good news because the attention is on other people. It's not on China and related things. So again, a good thing for the Hong Kong market as well. So for the time being, it's pretty happy days for Hong Kong.
Yeah, happy days for Hong Kong. Not so happy when it comes to the JGB market and what we're seeing in long rates. As we get closer to this upper house election this weekend, Mark, what are we watching out for in terms of dollar yen too?
Yeah, we're calling it a perfect domestic storm for the yen and for the Japanese market. Everything is going wrong all at the same time here. You have a lot of people predicting that the LDP and its coalition is going to lose its majority in the upper house. That's probably going to end up with a result which is very inconclusive. That's not good for policy making in Japan at a time when they really need to be on top of things because they still don't have a trade deal with the United States, despite several meetings between the Japanese and the US people on that front, the negotiators. They still are no closer to a deal. So there's a risk of Japan losing out on that side. That's weighing on the currency especially. The fiscal situation doesn't look good, and if you get as kind of a hung parliament situation in the upper house, that again means that more fiscal spending is likely. That's going to weigh on the long end of the Japanese curve. All that is happening at the same time as you already have stagflation in Japan, and the Bank of Japan is really taking their time to address it. They say they want to raise interest rates again, but there's no sign of them doing so. So negative yields in Japan are just getting worse. And every time you see short-term US yields back up a little bit further, again, that's no good for the Japanese yen. There's really, everywhere you look, things are turning negative for the yen and for JGBs, and it's not going to improve in the near term.
Oh, Mark. Okay, Mark Franco there. Our life strategist, as we leave on that sort of negative note when it comes to Japan here, let's take a look at what's going on in China. Certainly a lot of positive vibes there at the China supply chain opening ceremony in Beijing. We're expected to hear possibly from the Nvidia boss, Jensen Huang, obviously in the back of them getting that approval from the U.S. to resume H20 chips to China. Plenty more ahead. This is Bloomberg.
Right, about an hour into the session, 1.5%. We're led by consumption. We're led by tech. Your movers are coming up on your screens. And the intersection between those two sectors, everything from Baba Health and some of the trip-related stocks, the top 10 on your screens an hour into the session.
$11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break, and as Mark Cranfield kind of highlighted for us, there's a bit of pain when it comes to the JGB market and dollar yen, right? So 150 certainly is in sights when you take a look at that currency here this morning. Stocks are slightly under pressure here, but it really is what we're seeing in the JGB market, and we're talking about the 30-year yield now at 316 levels here this morning, Dave.
Yeah, on the 30, and I think the 40-year is the only one on the long end of the curve that remains, that hasn't really taken out recent highs. So I think a couple of basis points more on the 40-year, and we're back to levels that, frankly, I don't think we've seen in a generation. Now, it may be slightly smaller scale in terms of the time frame, but we've hit a milestone on the Hang Seng Index in the first hour of trade. So we were above 28,000 about a couple of minutes back. We paired back, as you can see, 24/7 right now. But at about these levels, we should still be flirting with 2022 highs here on the Hang Seng Index. So it's really tech, consumption, that's really in the intersection between the two sectors that are leading this. On the back of that, we've also had some upgrades in terms of growth for the economy. We've had UBS and Morgan Stanley this morning so far that have come out and revised their forecasts higher for the Chinese economy. All things equal, we're doing well on these Chinese markets. Right, now speaking of, UBP upgraded their Chinese equity rating this month from negative to neutral, and they do see, of course, offshore Chinese stocks as slightly superior to what you're seeing in the onshore space. Let's bring in Linda Lam, UBP's head of North Asia Equity Advisory, here with us in our set. Nice to see you. Good morning.
Good morning. Thanks for having me.
So, neutral on China, but that's a good thing?
That's in our recent years of history, it's already one of the highest ratings we have on Chinese equities. Yeah,
because what's changed?
Yeah.
I think after two bouts of rallies, one late last year and also early this year, we do see that actually there is also some of the structural changes like AI and robotics development, which also underpinned our actually preference towards H shares, because we find more stock opportunities in, for example, in the stocks listed in Hong Kong rather than A shares. Yeah.
And do you stick to the national champions? Because, I mean, when I hear something like Nvidia resuming the sale of their chips to China, do I look at just some of these tech platforms in China that are building on the AI capabilities as a winner, or do I look at the whole supply chain too now?
I would actually prefer those tech giants, those that are used the China's hyperscalers, so to speak. Okay. Those Alibaba and Tencent, they really need Nvidia chips to further build out on the data center capability. And so that is why you've seen the Hong Kong market, I mean, especially those shares, tech shares, led the rally yesterday and also today. I think over the longer term, this AI, especially on the LLM model, in developing software, is where Chinese tech's edge is.
So are clients buying into the bull case in China, particularly on AI and tech? Like, what are you hearing from your clients? I know you have a 3 out of 5, which is, as you point out, already a good thing relative to where you were a couple of years back. But are your clients buying into the message?
Yeah, interestingly, it is actually quite client-driven. I mean, early in this year, we started to see some of our foreign investor, ultra-high net worth family offices. They used to quite shun away from the Chinese markets for years. You know, have traumatized by the underperformance for years. Started to ask us questions like, "Have I missed a boat?" Looking at the rally late last year, and so I think they are now. Dipping their toe back into this market. Okay. And I think the first destination would be the tech space, especially the large ones.
Is there any chance that this rally could broaden out then, beyond just the tech space?
Yes, of course. I mean, any industries or consumption industries, I would call it new consumption, that can embrace the changing trends of AI would be the next wave of beneficiary. Yeah. What
would it take for you to upgrade this market even further beyond neutral? What do you need to see?
And beyond just tactical, right?
And beyond just
yes. So one point is a broadening out of the sector rally. But in fact, if you look at the Hang Seng Index, to be fair, it's not just the tech sector leading the rally. If you look at financial names like the Chinese banks, those dividend-paying stocks are also quite performing well. So I think what needs we need to see more evidence in the turning point in terms of the China trying to stem the deflationary trend. As we all know that, now this inflationary sort of trend, now everyone is talking about deflation. I think we need to see a stop in that space, yeah.
A big talking point separately has been HIBOR here in the city. And is that a good indication of risk appetite, you think, as it pertains to, IPOs are a big talking point as well. And I wonder, how you're thinking about HIBOR and the listing market here in Hong Kong.
Well, of course, HIBOR is driven by, the supply demand for the Hong Kong dollar and all these things, right? But I would say that from a stock market participant perspective, a low HIBOR definitely could view risk sentiment. And that's also one of the reasons that underpin the robust trading activities in the Hong Kong stock market.
What about southbound flows? Should I continue that momentum? Should I expect that to continue?
Yeah, we should continue to expect that, because I think southbound flows now serve as a stabilizer. Okay, so now if you look at the statistics, southbound flows takes up around 20% of the average daily turnover of Hong Kong stocks. So I think it's definitely one of the leading indicator. But I would say that if you look at the flows pattern, they tend to act as a stabilizer when the market is in stress, especially under all these tariff headwinds. You can see actually southbound come as a sort of a national rescue team.
Right. Now, the reemergence of the U.S. market in the last few weeks or so has, I think one of our guests, or some of our guests have pointed out, that's actually a risk now for EM markets that have benefited from the weak dollar. And then you have AI, you have Nvidia now at $4 trillion, the S&P. And so I guess that's just a long way of asking you, from this point to the end of the year, what do you think will outperform? Will it be the Hong Kong market? Or do I look back at the U.S. equity market as a potential source of alpha?
Yeah. So at UBP, we still carry an overweight 4 out of 5 rating in the U.S. equities. So we still champion the thought of having U.S. equities as the core allocation. I would say actually many people would have said, okay, well, you buy U.S. tech or China tech, so why not both? I mean, both. That's right. I think the world really needs, the two countries to be working together in terms of this space. This is unlocking a blue sky in terms of the technological advancement. So I would say actually, well, of course, the U.S. equities now is challenging, flirting with new highs, and valuation is definitely not cheap. So at this moment, tactically, we do see a lot more, at least in the tech space, in terms of valuation in China or Hong Kong listed stocks. Yeah.
Linda, it's great to have you. Linda Lam there, head of North Asia Equity Advisory at UBP. Let's take you back to those live pictures out of Beijing this morning. This is the China supply chain opening ceremony. And yeah, we heard the likes from He Lifeng just speaking just earlier here and talking a little bit more about expanding international exchanges in tech, in science. Obviously, as we start to see maybe more warm sort of signals coming through in these U.S.-China trade talks, the big news, of course, as we talked about yesterday, is Nvidia resuming their H20 chips to China certainly is a big, big message that Nvidia boss Jensen Huang is going to be relaying to the crowd here. He is in attendance. Nvidia, the first time at this event.
Yes, and so He Fang just wrapped up, we believe, before they play that audiovisual presentation. And obviously, it's very hard to make out who it is on the stage right now. But we understand that possibly the next speaker in line in Beijing, and to the point we were just making there, and yeah, the cameras. Thank you so much. There we go. Yeah, still, of course, there. We're still waiting for Jensen Huang to speak, but yes, we are still hearing, of course, there from He Fang talking about how the importance for expanding exchanges and channels and networks when it comes to tech and science. As earlier on, of course, our guest just now, Linda Lam from UBP, pointed out, why can't you buy both? It doesn't have to be one or the other when it comes to tech.
I mean, because it could work either way, right? If you're loosening export curbs from the U.S., does that mean that that allows China tech to flourish in some ways and catch up when it comes to AI capabilities against the U.S.? And then there's a whole self-sufficiency sort of theme as well. Yep. That still, people say, is quite intact, that trade. Okay, we have plenty more ahead. This is Bloomberg.
U.S. Treasury Secretary Scott Bessent says it would be confusing for a former Fed chair to remain on the board once their term ends. This an exclusive in an interview with Bloomberg. He confirmed that while President Trump has no plans to fire Jay Powell, the formal process to select his successor is already underway.
As President Trump said, he's not looking to fire Chair Powell. And as I've said, I'm not going to comment on future policy or future mistakes the Fed will make. I'll only comment on past mistakes. And look, they've had some big forecasting errors, and this may be one now.
Is there a reason for not firing him? And I ask that question because the president's also said that his term is about to expire in May of next year. Is that the reason to ultimately just wait? Or is it something else? Are you convinced by the negative consequences associated with such a move?
Look, I think an independent central bank is very important for the conduct of monetary policy, and we can see that in terms of both the financial markets, the term premium, and longer-term debt.
You said previously the interview process would begin later on in the fall. There's been plenty of speculation as to whether that process would be brought forward. Mr. Secretary, do you still, as far as you understand, believe that's when the interview process to replace the Fed chair will begin in the fall, or has a formal process already started?
Well, look, there's a formal process that's already starting. There are a lot of great candidates, and we'll see how rapidly it progresses. It's President Trump's decision, and it will move at his speed.
Do you see any merit at all in selecting maybe a candidate that's already on the committee on the FOMC versus taking a look at someone outside of the Federal Reserve?
Again, there are a lot of good candidates inside and outside the Federal Reserve, Jonathan.
Has the chairman himself, the Fed chair Jay Powell, given you any indication whatsoever as to what he would do once his term has expired? Will he vacate his seat as the governor of the Federal Reserve?
Well, traditionally, the Fed chair also steps down as a governor, and there's been a lot of talk of a shadow Fed chair causing confusion in advance of his or her nomination. And I can tell you, I think it'd be very confusing for the market for a former Fed chair to stay on also.
U.S. Treasury Secretary Scott Bessent there speaking with her colleague Jonathan Ferro. In some other corporate news and really tracking what's been going on in the U.S. earnings season, J.P. Morgan posted a surprise 7% gain in investment banking fees last quarter. The CEO, Jamie Dimon, says deal-making momentum picked up as market sentiment improved, despite lingering risks from tariffs, geopolitical tensions, and elevated asset prices. Fixed income and equity trading pulled in $5.7 billion, also beating estimates. A different story for Wells Fargo, though, lowering its full-year net interest income forecast after falling short of second quarter estimates. Executives blame weak loan demand tied to trade tensions, but say lending activity improved late in the quarter. Wells says it plans to lean on markets and credit cards for future growth. Citi shares closed at the highest in more than 16 years after the bank announced plans to repurchase at least $4 billion in stock this quarter. The move follows strong stress test results and a 20% surge in quarterly fixed income trading revenue. CEO Jane Fraser says returning capital to shareholders is now a key priority.
Right, let's have a look at what's trending in China. Of course, one of the key topics right now we've been talking about, and we'll look into how that's showing up across national newspapers, social media, is the trip, of course, from the Prime Minister, well, certainly Prime Minister there, Anthony Albanese, of course, a meeting with President Xi Jinping, and, of course, the ability that they've so far been able to sidestep some of the thorny issues, including security tensions and, of course, this forced sale of a Chinese-owned port in Darwin. Let's bring in Min Min, our China correspondent, to take us through what she's seeing so far and how the state visit is being viewed domestically.
Yes, if you read state media, you would think that the visit had gone very well because it's been heavily covered. There has been a couple of editorials as well, and really highlighting how this is the longest trip that Prime Minister Albanese has taken to a single country. It's a week-long trip going to Beijing, Shanghai, to Chengdu with a business delegation as well. And take a look at this China Daily quote. It says, Albanese's visit shows that the Australian side has a clearer judgment and understanding of China than it had under the previous Scott Morrison government. And you remember, Albanese came in trying to reset ties with China after Australia had been hit with these punitive tariffs because Australia was calling for this inquiry into the origins of COVID-19, right? And this Global Times article also saying that China-Australia ties are like a plane flying in the stratosphere after passing through the storm zone. The most turbulent and bumpy period has passed. So it's a very ringing endorsement for the Albanese government. And it's coming as both sides are now looking to review this free trade agreement that the two sides have. The article also saying this is a desirable time to do it after those discussions were shelved under the Morrison administration.
There are still some sticking points between China and Australia, right? I mean, obviously, U.S. security issues are certainly one thing that's been kind of made this trip a little bit more awkward. And it seems like he's sidestepping all these issues right now.
Yeah, and actually the article mentioned that it talked about this source of external interference. It didn't explicitly mention the U.S., but we know the U.S. has been pressuring Australia to increase its defense spending, for example, to counter what it sees as Chinese assertiveness in the region. And there are a few sticking points, right, including the forced sale of this port, which Australia wants to take back because of security reasons. It's close to a U.S. military base. There's also reports of U.S. asking Australia to clarify its position on Taiwan in the event of an attack. There's also the foreign investment sort of regime where Australia has oppose some of these proposed deals by Chinese companies, but it looks like none of these had been discussed. And if you look at the chart, China's trade with Australia is huge. China is by far the biggest trading partner that Australia has. A third of Australia's exports go to China. And so Australia is walking this very fine line here because it relies on China for trade, but relies on the U.S. for security, both sides having all these joint drills in the Indo-Pacific as well. But overall, very positive tone from China.
Now, there's research that's been put out right now, and a survey there that shows, I think, geopolitical perceptions of China have improved. What were the key findings there?
Yes, so this survey, it's a Pew Research survey that was done between January to late April. Okay. And of course, this is a time when Trump is in power, right? And he was introducing all of these reciprocal tariffs. So views towards the U.S. had deteriorated while perceptions toward China improved. And there's also this chart. It shows you that the confidence that people have in Chinese President Xi Jinping has exceeded the confidence in a U.S. leader. And this is the first time that that happened since Trump's first term in power during 2016 to 2020 or so. And another interesting finding that I saw was it looks like more people now regards China as the leading economic power. So 41% gave that title to China versus 39% to the U.S. So it's a very narrow lead, but it's still significant because a couple of years ago, it was significantly more people that view U.S. as the leading economic power. So you're seeing that power dynamic shifting, and it looks like, the Chinese president's outreach to Southeast Asia and to Africa has been paying off, just as the U.S. is pulling back internationally when it comes to international aid and international outreach.
Lowe, our China correspondent there, with the latest. And as we were talking about, we have another bank that's come through and upgrading their China GDP forecast for this year. So ANZ is the next one. This was quite an upgrade, though, right? From 4.2% to 5.1% and above, of course, that target.
And it's, this is Raymond Young, I believe, in his team, right? And, Raymond comes on the show every now and then quite a regular, of course, in the show. And it's worth pointing out that, when you look at the range of forecasts over the last few years or so, ANZ has been rather conservative when it comes to its estimates, right? So this is something coming from them and bumping up that forecast. And it follows two other banks this morning, UBS and Morgan Stanley, that have upgraded their own forecast for Chinese growth following the release of the growth numbers, which came out this time yesterday. And, of course, this sort of recalibration of what the next 6 months might hold because of the starting point right now moving forward. Okay, markets are doing well, of course, and this is a look at markets really as it pertains to trade conversation. Indonesia, of course, we heard from that. We've yet to hear from the Indonesian, the joint statement. Hong Kong is a beneficiary, but to a lesser extent now, off highs of the day because of the Nvidia story, because of the trade conversation. And, of course, Taiwan, we did hear from them earlier on that they do expect to ink a trade deal, no details given, before the deadline on August 1st. Plenty more ahead. This is Bloomberg.
David's hump day, so we got to talk about some drinks and drinking.
Not?
Why not? Right? We made it through halfway through the week. And if you've been tracking kind of the best bars in Asia, Hong Kong took the top crown once again. Congratulations, Bar Leone, right? So I am going to be frank. I haven't been to I can't even say like 90% of these bars. But Bar Leone I have been to, and I love it. But yeah, we kind of come up with our own sort of list as well, right, here at Bloomberg TV. We love doing that.
Yeah, so
we're a thirsty bunch.
I mean, it's always happy hour somewhere in the world. And you know what? Like, here's the thing, right? Here's the thing. When people frown upon day drinking, and I'm not encouraging day drinking by any means, right?
Where are you going with this?
The further away you consume, a decent amount of alcohol, a responsible amount of alcohol from the time you wake up, is probably a better thing than the closer you finish your last drink and you wake up. Right? So if in other words, you're simply putting that gap between your consumption and
David's giving us his
when
drinking.
It doesn't matter.
Yeah, his drinking habits.
Yeah.
On this
I was going to say this, but the last time someone invited me out for a drink was at 1 o'clock in the afternoon.
Okay.
Yes.
That fits me more too in my schedule these days.
Yes.
Okay. The China show we kind of came up with our own list. Let chime in to see if you agree. Right? These are the ones. But Hong Kong, though. We focus it more on Hong Kong.
Yeah, to be more specific. Yeah,
Which one was yours, Dave?
Forbes 36.
Okay. I don't know that one.
That's our local watering hole, and I don't need anything fancy, really.
You gotta love a good dive bar, little, neighborhood joint, right?
The stickier the floor, the better.
Well, you can actually hear it.
Yes.
Mine's just...
What was yours?
I'm so lame. I couldn't think of one, so I didn't submit in time. But I'm going to suggest now my couch. That is where I like to have a nice beverage from time to time.
When Yvonne opens up those very expensive bottles of
I'm in my mama era. I'm in my mama era. I can't really go out and,
Okay.
Yeah.
Well, next time, Forbes 36 on me. I'll get you a half a pint of IPA.
Honky tonk. Shout out to them.
Anyway, something to cheers about is this market that is doing quite well here in Hong Kong. In fact, if we do close above, at the current levels on the Hang Seng Index, we are at around 3-year highs. We'll see it not whether we are able to get across the line today. We're at 24.6 right now, 2,500 in fact earlier on, but as you can see, we've since paired back from there. Big winners today so far, Alibaba Health all the way down to the IA place in terms of Baidu. This is in the news today as well.
Yeah, so this partnership with Uber certainly has been lifting the stock a little bit here as well. So Baidu's up 2.5%. We're off some of the initial highs, but the tech space is still looking pretty strong right now. That's it for us here in the China Show. Inside with Helena Ahmed.
Cheers.
Next.